corporate accounting, unit 1, company liquidation. Clear? Company liquidation. So what is liquidation? Liquidation is a process of bringing the business to an end, okay, and distributing all the assets to the claimants, that is shareholders and the creditors. This is nothing but winding up of business. Clear? Liquidation, putting the end to life of the business. Clear? So as per section 270 of Companies Act 2013, compulsory winding up by, there are two types of winding up, that is compulsory winding up by tribunal and voluntary winding up by members and creditors of the business. Clear? So compulsory winding up is as per section 271, and voluntary winding up can be done either through members or through creditors. So any of the ways the company can liquidate. Clear? So first we will go with compulsory winding up by tribunal. Compulsory winding up. What is compulsory winding up? The word itself says it is compulsorily the company has to be wound up. Clear? Compulsorily the company is going to receive a notice from tribunal as per section 271. Clear? So when the company receives a notice from tribunal to wind up, then compulsorily it has to wind up. So under what circumstances it is going to receive a notice? Under the following circumstances. See here, when unable to pay back its debts, when the company is not in a position to pay back the debts, then in that situation compulsory winding up takes place. Tribunal will issue a notice for compulsory winding up. Clear? Then by passing a special resolution, also they can receive a notice from tribunal to wind up for compulsory winding up. Clear? Then not filing the return, income tax return, not filing the return for 4 consequent years, then in that situation tribunal will pass a winding up notice. Clear? Then under just and equitable grounds also tribunal will issue a notice for compulsory winding up. And any fraudulent business activities are taking place due to misfeasance or misconduct, then in that situation also tribunal or any other official may issue a notice to the company for which compulsory winding up. Clear? Then voluntarily, when the members and creditors are going to wind up the business, then voluntary winding up. Then it is called as voluntary winding up. What is voluntary winding up? Voluntary winding up can be done in two ways: by passing a ordinary resolution or by passing a special resolution. First, when the ordinary resolution will be passed and when special resolution will be passed. Ordinary resolution will be passed when actually company life has been come to an end. The objectives of the company may tell that it has to wind up the business. Then once the time limit of the company is expired, then by passing an ordinary resolution, the voluntary winding up can be done. Next, on the happening of any of the event mentioned, then the company activities can be terminated, and by passing an ordinary resolution, voluntary winding up can be done. And by passing a special resolution, members or by creditors, winding up can be done. This is voluntary winding up by members or creditors. Clear? So how this process takes place? Once the order is issued by the tribunal, or once they have decided for winding up, then liquidator must be appointed. In the compulsory winding up situation, liquidator will be appointed by the tribunal itself, and official liquidator will take care of the proceedings of the liquidation of the company process. Clear? And in case of voluntary winding up, company need to appoint a liquidator in order to look into the affairs of the business. So under voluntary winding up and both compulsory winding up, statement of affairs will be prepared by the company. Clear? So statement of affairs will be prepared by the company as per section 274 of Companies Act. This has to be prepared by the company directors, CEOs. They have to prepare the statement of affairs. Clear? And submit it to the liquidator. Once they submit the statement of affairs to the liquidator, then only the liquidation process begins. Clear? Once the statement is received by the liquidator, liquidator will start the process. Clear? Submit the statement of affairs of the company within 21 days from the date of winding up order. Okay, within 21 days they have to submit the statement of affairs to the liquidator. This 21 days can be extended up to 3 months by court or liquidator. Clear? So what does the statement of affair contains? Statement of affairs contains all the particulars about the company's assets and all the other details. Clear? This covers the following list. Here is a list A to H. So in list A, they will mention all the assets which are not specifically pledged. All the assets which are not specifically pledged, the free assets will be put together under list A. Then list B, here list of all the assets specifically which are pledged with any of the creditors. See, which are pledged with secured creditors. Clear? Then list C, preferential creditors. They are unsecured creditors, but they have preferential right to be paid first. Clear? They have preferential right which is given by the company. They will be paid first before any other creditor is paid. That's why they are called as preferential creditors. Such preferential creditors come under list C. Next, list D, debenture holders secured by floating charges. All the list of debenture holders which are secured by floating charges. Next, list E, unsecured creditors. See, list C and E are unsecured creditors only, but list C will have preferential right to be paid first. Then list F, paid up preference share capital. Only paid up part of preferential share capital will be taken. Next, list G, paid up equity share capital. Only paid up part. Next, list H, estimated surplus or deficiency. This all details will be covered under statement of affairs. Once the statement of affairs is submitted to the liquidator, next process begins. He starts distributing all the assets and redistribute the assets to the creditors in the specific order. Clear? Let us discuss about list C, preferential creditors. Okay. Who all come under this preferential creditors? What is preferential creditors? They are unsecured creditors, but with a preferential right to be paid priority. Clear? So the following preferential creditors shall be paid in priority to the unsecured creditors. Before we pay to unsecured creditors, first priority will be given to these preferential creditors. Clear? So who all come under this category? Here, all revenues, taxes, rates which are due and payable by the company in the 12 months period right before the winding up period. Those all amount, either the tax which is payable to government, any amount which is payable, those all are unsecured creditors. Clear? Like that is preferential creditors. Next, all wages and salaries which are due for the period of not more than 4 months. Maximum 4 months is treated as preferential creditors. Clear? So within the 12 months period, if more than 4 months is also due, only up to 4 months it is treated as preferential creditors. And the maximum limit for that amount is rupees 20,000. So under this, 4 months salary due or 20,000, maximum 20,000 up to 20,000 amount is treated as preferential creditors. Then any holiday remuneration payable to the employee and all contributions payable within the 12 months period. Okay. Within the 12 months period under employee state insurance scheme, that is ESI, and all sums which are payable, all the amounts which are payable under workmen's compensation, provident fund or pension fund, gratuity fund, any payment which is due, any contribution which is due from the employer side, then these all will be treated as preferential creditors. First, these creditors will be cleared, will be paid first. So that's why they are called as priority. Clear? Though they are unsecured creditors, they have the priority, they have that preference to be paid. Clear? Next, we will go with liquidator's final statement. Clear? Liquidator's final statement. As soon as we prepare the statement of affairs and submit it to liquidator, liquidator begins the process. What he does, he has to realize all the assets and distribute it to creditors. See, the liquidator is required to realize the assets and distribute the proceeds among the parties having claims against the company, like creditors or the financial institutions, shareholders, etc. Clear? So first step is to realize the assets. So these all will be prepared, these all will be detailedly given in shown in statement which is called as liquidator's final statement of account. This is similar to a cash book, liquidator's cash book, where all receipts and payments will be shown. See, receipts, when the liquidator realize the asset, he will receive. So those all will be written under receipts column. See, two assets realized, total assets, how much amount is realized, that amount will be taken here. Next, cash and bank balance, all the cash and bank balances. Next, surplus from securities and calls in arrears which are realized. Then calls on contributor is realized. So all realized amount will be on receipt side. And payments, what all payments will be made first? First, liquidator's remuneration and liquidator's expenses will be paid first. Liquidator remuneration, how to calculate liquidator remuneration, I will explain you in the upcoming classes. So, liquidator's remuneration either on assets realized or on amount distributed. There are two ways, either on asset realized or on amount distributed, or by next you have liquidation expenses. Next, by debenture holders with interest, outstanding interest, debentures and interest outstanding. Next, preferential creditors, just now we have discussed preferential creditors. Next, you have unsecured creditors. After making payment to the preferential creditors, next payment will be made to unsecured creditors. Next, the preferential share capital, shareholders. Preferential shareholders, capital amount and the arrears of dividends. Next, at last, equity shareholders will be paid. Clear? So, this is a liquidator's format for liquidator's final statement of accounts. Now, next we will discuss about liquidator's remuneration. Now, liquidator's remuneration. Liquidator's remuneration, once the liquidator is appointed for compulsory winding up. Okay, for compulsory winding up, liquidator will be appointed by the court and remuneration also fixed and paid by the court. So, in case of compulsory winding up, remuneration is fixed by the court and paid by the court, by the tribunal. Okay. Case of voluntary winding up, during the appointment, remuneration is fixed in the meeting. Clear? So, usually the remuneration consists of commission on assets realized and commission on amount paid to unsecured creditors. Both commission on assets realized and commission on unsecured creditors. Clear? So, on assets realized, how do we calculate on assets realized? See, the term assets realized does not include bank and cash balances. If cash and bank balance are listed under the list of assets, then in that case it will be included. If not, basically cash and bank balance are not included in assets realized. Clear? So, if security given to any secured creditors, if any asset is pledged to secured creditor, then in that situation the liquidator may sell that asset in order to realize the value. So, while selling, the liquidator will get commission against that sale. See, the security given to secured creditors is sold by the liquidator. If it is sold by the liquidator, then he will get commission on the security sold. Clear? And if any surplus after selling, for example, asset value is, loan amount is 8 lakhs, asset value is somewhere around 10 lakh. Okay, after making payment to the secured creditors 8 lakhs, 2 lakhs is surplus. So that surplus amount also will be given to liquidator. Clear? So on amount paid to unsecured creditors. Now commission on amount paid to unsecured creditors. This is commission on asset realized. This is commission on amount paid to unsecured creditors. So usually liquidator remuneration includes both commission on asset realized plus commission on amount paid to unsecured creditors. Clear? So on amount paid to unsecured creditors, unless and until it is mentioned or stated for the calculation of remuneration purpose, The term unsecured creditors include preferential creditors also. Clear? We should include preferential creditors also until and unless it is stated. Okay. Then how do we calculate the commission in this situation? So in this situation, you have two different categories. One is when the company is solvent and when the company is insolvent. What is solvent? When the company is solvent, that means the assets realized are more than the creditors. Then the company will be in a position to pay to the creditors. So, if the amount available is sufficient to pay the unsecured creditors, this situation is when the company is solvent. It has the ability to pay back the creditors. Clear? So, in this situation, how do we calculate commission? Unsecured creditors plus preferential creditors into rate by 100. If at all anything is mentioned that preferential creditors must not be included, then in that situation, only unsecured creditors into rate by 100 will be the formula to calculate commission. Clear? Next, if the amount available is insufficient to pay to unsecured creditors, in this situation is when the company is unable to pay back the creditors, because the assets realized, after the realization of assets, there is insufficient fund to pay to unsecured creditors. So, in this situation, how do we calculate commission? Amount available into rate by 100 plus rate. This is the formula to calculate commission in an insolvent company situation. Clear? Sometimes the remuneration is paid on the amount which is paid to the shareholders. Clear? So, in this case, remuneration can be calculated in this way. Paying shareholders into rate by 100 plus rate. So, these are the three different ways how to calculate commission. Commission on the amount paid to the unsecured creditors. So, if we put together these two commissions, we get liquidators remuneration. Clear?